Let's kick off with the broad environment that you experienced in the past quarter. Was there a little bit of softness you saw in the U.S. consumer?
You know, we think the consumer is really strong, and we were pleased with, really pleased across both brands in all three segments. We had really solid fundamental growth. I think the investments that we made over the last couple of years are really starting to pay off, and the blueprint for growth, which is our operating plan for Dunkin' US, continues to make progress. So we're happy year 3 of the plan, and we're continuing to keep working that plan.
But traffic is still negative, Dave, and it's been persistently negative. How do you fix that?
Yeah, you know, it's not going to be one thing, Sarah. You know, in the quarter, we had the best traffic we've ever had in 5 years, still negative. Our 2-year stack in 19 over 18 significantly improved. But, you know, it's going to be, I like our triangle offense that we had in Q4, which was premium beverages with the signature latte. It was our food innovation with Beyond Meat sandwich, and it was compelling value. When you do those three things in the marketplace, underpinned by great execution and a really good digital platform, we think we're really tough in the market. So we're going to keep working that plan, and we're seeing a strong consumer, and we're excited about 2020.
Do you think Beyond has specifically driven traffic, or is it just an option that some people that were coming into the stores anyway may happen to pick?
Yeah, Wilfred, I think it's both. You know, the blueprint in our plan has been all about broadening our sweet spot, and I think we've tapped into somebody health aware on a budget, and so we're getting new consumers. So I really think it's both. I like what we're seeing out of this. You know, I have a really good relationship with Ethan Brown over at Beyond, and I like his mission paired with our platform. So we're talking about more things down the road. We're happy with our first venture into this, and I think the consumers are responding.
Dave, it's Stephanie Link. I have a question about the next gen remodeling. You're going to accelerate to 500 stores this year, and you said you're going to do more next year. Is there any way you could actually accelerate that? Because you do have a store base of 9,000. So I'm just curious, because you've seen such good returns so far.
Yeah, and look, the next gen restaurant, the franchisees are excited. It's been our best comp sales and traffic driver to date. So we've been working very closely with the franchisees. You know, we're transforming a 70-year-old brand. There's a lot of investments we're making into the business. And look, we're looking to double production this year and accelerate that even further down the line. But we're a fleet of 10,000 in the U.S. It's not going to happen overnight, but we're excited about the uptake that we see with the franchisees.
So Wendy's just announced that it's going into breakfast, I think highlighting that is a fast-growing day part, but it's also increasingly competitive. How do you deal with that kind of competitive pressure and keep differentiating to get people in for breakfast at Dunkin'?
Yeah, you know, Sarah, it's a really good question, and our industry, as you know, is highly competitive, and we're just trying to stay focused on what we do best. We think our competitive advantage is we are one of the few players that can deliver great quality coffee and great food like the Beyond sandwich at the speed of Dunkin', and we think we're one of the few that can deliver against that trifecta. So whether it's breakfast wars now, coffee wars, our industry is competitive, and we fight every day. So we're focused on what we do best, and we think that's what the consumer wants.
Wanted to ask Dave about the international expansion plans. I mean, clearly the brand value of Dunkin' here in the U.S. is incredibly strong. I wonder if you could compare to your previous role, where, of course, you were head of high-growth markets, China, South Korea, Russia, and European markets for McDonald's, whether the opportunity for Dunkin' to continue its expansion overseas is perhaps a little less clear if the brand value overseas is less strong than a company like McDonald's was.
Yeah, and Wilfred, you know, I've spent 12 years over there and living in Asia for nearly a decade, and look, I've spent a lot of time recently in our JV markets, which is Korea and Japan, and you might have seen in the performance we've done really well over there. I like not only on the Baskin side but the Dunkin' side. Our coffee forward strategy is really paying off in Amsterdam and the Netherlands. We're getting traction in places like Germany, and we recently have a new franchisee in Spain. So. You know, for us, we had to first get out of markets that we had no business being in, and we did that over the last couple of years. And now we're really leaning into what we do best, which is, you know, great coffee fast and this coffee forward strategy. And I look over in Korea in Japan, it's probably some of our best expressions of Baskin-Robbins, and we're taking those learnings and that innovation and boomeranging it back here to the U.S. as well. So I'm excited about it. Still, we're valued on Dunkin' U.S., but I'm excited about the opportunities on the international side as well.
What about the opportunity in China, Dave? I know it's only, 1% of your business now, but you did mention you were monitoring coronavirus. How's it impacting the stores that you have, and does it prevent you from a more aggressive expansion in that country?
Yeah, Sarah, like I said on the call this morning, it's between both brands. It's only 71 restaurants out of a fleet of 21,000. But I lived over there for 12 years. All of us, even you guys over there, we have a lot of friends and colleagues over there. So, really small on the business impact, but a big concern on, in our hearts on the people over there. I think for us, it's less about the impact on the 71 restaurants, more about the impact of the contagion of fear that it may have in the other markets. And so that's what we're monitoring. But, like any global QSR brand, we've got daily calls. We're trying to, doing the right thing with our employees, the communities, and our franchisees right now.